Hello everyone, it's Gurul Kanchakar's YouTube channel. Today we are going to talk about liquidation of companies. The provisions governing the dissolution and liquidation applies to both joint stock companies and limited liability companies, which are the two most common commercial entity types in Turkey. There are two forms of liquidation, voluntary and compulsory. Voluntary liquidation is triggered when the decision to liquidate a company is taken by its General Assembly, whereas a compulsory liquidation arises when the decision to liquidate the company is given by a court. Liquidation reasons can be divided into two subcategories, namely general and specific reasons. The specific reasons mentioned in the Commercial Code are lack of compulsory organs and liquidation by justifiable reasons. In case there are justifiable reasons for liquidation, shareholders who represent at least 10% of the shares can ask the competent court to render a verdict on liquidation of the company. The legal personality of the company will only be lost when the liquidation process is complete and the company is deleted from the trade registry. A company in liquidation can continue its business operations as long as they support the liquidation procedure. When a resolution for liquidating the company is taken in the General Assembly, one or more individuals are appointed as liquidator, either from within or outside the company. The liquidator has fiduciary duties and is personally liable for his actions or negligence towards the company and third parties. The first step that will be taken by the liquidator is to analyze the company and prepare an inventory and balance sheet. The inventory statement, balance sheet, and valuation report will then be submitted to the General Assembly for approval. The liquidator can start the liquidation process after obtaining the approval of the General Assembly. After extinguishing all debts of the company, if there are still remaining assets, the liquidator first refunds the share capital to shareholders. The remaining assets will then be distributed between shareholders in proportion to their contribution in company's capital, unless stipulated otherwise in the company's Articles of Association. The General Assembly is then convened for the last time. Upon approval of the General Assembly, the decision regarding the closure of liquidation process is registered, and finally the name of the company is permanently deleted from the trade registry. The liquidator is dismissed from his duties at the end of the process. A company in liquidation is subject to the same tax treatment as active company, so the company has to pay corporate tax as well as value-added tax.